Welcome to BizCase Studio. In this new series, we are diving into a powerful topic that's shaping the future of finance: sustainable investing. If you have ever wondered how investing can go beyond profits to make a real impact, you're in the right place. So don't forget to subscribe and hit that like button. Sustainability. Sustainable development means meeting our needs today without stopping future generation from meeting theirs. So, just think of it like borrowing this planet, not taking it. It's about responsibility in everything we build, use, and invest in. This word sustainability is right now in this generation and this current time a very popular word, and you will see most of the companies, major companies, the MNCs, using this word sustainability and actually, uh, you know, trying to achieve the sustainable development in their businesses. So, let us see what is sustainable investment. Sustainable investing is when investors care not only about making money but also about the impact their money makes, especially on the environment, people, and how companies are run. So, sustainability has three main pillars, and that is environmental, social, and governance. ESG, which we commonly use, ESG, environmental, social, and governance. This is the three main pillar of sustainability. For example, an investor might choose a company that uses clean energy over one that pollutes, even if both are profitable. So that is sustainable investment. Investing into something where sustainability is playing a part. The definition of sustainable investment comprises three levels of sustainability: economic, environmental, and social and cultural. So, now let us see these three levels individually and how these three levels is contributing to sustainable investment. The first one, economic, from the economic view, sustainable investing means focusing on long term value, not just quick profits. Imagine investing in a water company that improves access in the rural areas. That's long term value, and it's helping people too. From the economic view, sustainable investing also means avoiding shady practices like corruption and making sure basic needs like food and water are never at risk. So, this is from the economic perspective. Now, from the environmental angle, sustainable investments look at whether a company protects or harms the planet. This includes investing in companies that use renewable energy, recycle materials, and protect ecosystems like ocean and forests. From the social and cultural sustainability is all about people. For example, investing in a company that supports education, fair wages, equal opportunity, and respects cultural diversity. That's social impact. So basically, in a nutshell, if I say social from the social and cultural perspective, sustainable investment, it is about making sure profits don't come at the cost of human dignity or equality. So this is the three levels, and together they make what is called a sustainable investment. So basically, economic, environmental, social, and cultural. These three perspectives together should be taken into consideration when doing in sustainable investing. Now, there are a lot of terms used in sustainable investing. Let's look at few important ones. The first one, corporate social responsibility, CSR. What does it say? A description of a company's overall responsibility towards society. So basically, CSR means corporate social responsibility, which is like when a company takes responsibility for its impact on society. That is CSR. And this you will see in many of the annual reports of the great companies and the sustainable report. You can just log into their websites and just see. You'll see a lot of CSR, this term used. It's nothing but the responsibility of the company for its impact on the society. Second, double bottom line, DBL. What does it say? Companies that focus on not only financial targets but also non financial ones, that is, social and environmental impact, is taken into account when measuring performance. So, double bottom line in a nutshell means companies measure both profit and social impact. Third one, ethical investments. What does it say? Describes investments that, in the broadest possible sense, take ethical consideration into account. So basically, ethical investing is when you avoid companies that go against your values. For example, tobacco, weapons. Fourth one, ESG. Just like I have mentioned earlier, it is the three pillars of sustainability, that is environmental, social, and governance. ESG investments embrace all three levels of sustainability. Number five, financial first investors. What does it say? Their primary goal is to maximize financial returns, but without completely losing sight of social and environmental returns. So basically, a financial first investor mainly wants returns, but still considers ESG. The main focus is in getting high returns, but they also look into the ESG. Number six, impact investing. What does it say? Investment aimed at achieving immediate environmental or social benefits. Examples include venture capital investment in companies in the clean tech sector or microfinance investment. Impact investing is basically when you invest specifically to create a social or environmental change. You're bringing an impact to the society. That is, so you're investing in a company that is actually bringing an impact through social or environmental changes. For example, like funding a solar startup or doing microfinance. Number seven is impact first investor. We saw financial first investor. Now this is impact first investor. What does it say? Their primary goal is to achieve the highest possible social and or environmental returns. In contrast to the financial first investors, they are also prepared to accept below market returns. Impact first investor focuses on making the most difference even if they earn less. The next one is mission related investments, MRI. So just like in the medical terms, in finance terms also we have a MRI, which means mission related investments. What does it say? Investment strategies of charitable institutions that are aligned with the institution's mission while also offering market returns. So, mission related investments are nothing but they're used by charities to align with their values and still earn. Number 9, philanthropic finance. It says an investment style whereby investors accept negative or below market returns in the pursuit of idealistic goals. The primary goal is to achieve a social and or environmental impact. So, in a nutshell, philanthropic finance is when investors don't expect profits. They just want to do good for the society. Profit is not their concern. That is philanthropic finance. Number 10, program related investments, PRI. They say investment that generally provide below market returns and are directly or closely allied with the charitable missions of an organization. So program related investment, it supports a charity's goal but may return less money. So it's purely, for example, like educate a child program or housing program for poor. There's no return, or maybe some less return is there in that kind of an investment, but the goal is what the main concern of that particular investment is. Number 11, social venture capital. It says risk capital for a social and or environmental goal that is also expected to produce a financial return. Nothing, it is nothing but social venture capital funds startups with both a mission and potential for profit. For example, let's say a company is uh, you know starting say terrace farming, right? And particularly in this concrete jungle areas where you have balcony, huge balconies and terraces, and this company is providing terrace farming solutions. So such a cause where you're actually you know helping the nature by planting, and you're making your vacant terrace into a good garden. So in that case, social venture capital funds such as startups because there is a mission as well as a potential for profit. Number 12, socially responsible investment. Socially responsible investment, in a simple way, if I say, is nothing but you only invest in companies that meet certain ethical and ESG standards. Social responsible investment means you only invest in companies that meet certain ethical and ESG standards. That is social responsible investment. Similarly, we have a sustainable and responsible investment, SRI, or the other name is sustainable investment. In this sustainable and responsible investing, it is similar to social responsible investment, but here it blends financial goals with purely ESG impact. In socially responsible investment, we had ethical as well as ESG impact. Over here, the financial goals are blending with ESG impact only. Number 14, triple bottom line. Triple bottom line, in a nutshell, if I summarize and say, It goes beyond profit and looks at people and planet too. So, for example, like a company measuring its social outreach and carbon footprint alongside revenue. We had a double bottom line. In the double bottom line, it was finance as well as people. But over here, we are looking at the finance, people, and planet. That becomes a triple bottom line. Number 15th, value based investing. It is value based investing is when your personal or religious beliefs shape your investment. It's all based on your values. If you find a project that is matching your values and you invest on it, that's called value based investing. And the final one, that is venture philanthropy. Venture philanthropy is nothing but a blend of charity and business, that is using entrepreneurial tools to create long term social change. Like, think of it as using business strategies to solve social problems. That is venture philanthropy. So, with this, we come to an end of the first part of sustainable investing. This was a brief introduction towards sustainable investing and few terminologies we saw. And so, thank you for watching the first part. And in the next video, we will be exploring the sustainable investing strategies. So, don't forget to subscribe, hit that like button, and the bell icon, and stay tuned for more real world MBA insights right here on BizCase Studio. Thank you.